watching Trade of the Week with me, Zinati Kuma. This week, Unum Capital's Hedge Fund Manager Loyiso Mpeta analyzes Anheuser-Busch Inbev South African listing against its US listing. Discovery, Mr. Price and Motus Holdings are also up for analysis. And Loyiso joins us now with greater insight. Thank you so much for your time, Loyiso. Starting off with AB Inbev, I think the last time we looked at it was in 2023. And actually, you're looking at it both from the perspective of the SA listing and also the US listing. What's behind that approach?
Yeah, so AB InBev is one of those counters because of its very global reach. I think it's listed at about 3 or 4 stock exchanges. And the US is always going to be one of the biggest and most liquid, right? And there's something interesting when you look at stocks which have got multiple listings. In as much as you've got different investors trading on the New York Stock Exchange compared to the JSE. There's something about human phenomena which is quite interesting, because when you look at the stock prices, they tend to have a very, very high correlation, even though they are not really linked per se. And because of these correlations, sometimes they create what is known as arbitrage opportunities. But from a technical perspective, because of the different investors in the different countries, when that investor psychology, which then gets reflected in the price charts, is sort of unfolding, you can get slight nuances in terms of differences in patterns. So sometimes on the JSE, the patterns may not be clear, but on the New York Stock Exchange, they may be clear. So you can actually use one or the other as sort of your base analysis, and then still get to execute on your preferred exchange. So that's what I want to be highlighting now, to highlight how on the JSE, the price patterns looked a bit more complex, but on the New York Stock Exchange, they were actually much, much more clearer, making it much more sort of, you'd get greater conviction trading on the New York Stock Exchange than on the JSE because of the clearer patterns. And because I'm sure it's because of more activity, as you mentioned, there is more liquidity there. So just show us that picture of what you're seeing there between the two listings of AB InBev. Yeah, so starting with the South African one from the last time we touched on AB InBev, and again, just focus on this very intricate sort of pullback, and then this sideways movement, which I labeled as an ABC zigzag with a push-up for X, and then a very complex triangle to complete wave 1 of wave 2, and then this advance with 804 Rand, where I said is the line in the sand. And this second wave actually prolonged, and it bottomed only in January of last year, but it still held above this key level. So this then became wave 2. So we have this rally now from 873, which I'm labeling as a lower degree wave 1, part of a much bigger or higher degree wave 3. So a very bullish look on AB InBev. And also when you look at it over the last few weeks trading, whereas all the global markets have been capitulating with Trump and his tariffs, look how resilient the stock has been. So this is very, very defensive from AB InBev. So as we know, we don't expect the stock to go up in a straight line, but the picture is very, very bullish. So just in terms of the comparison between the JSE and the New York Stock Exchange, again, just focus on this correction and also look at how sort of choppy this price is here. And then when you look at it from the American perspective, still the same as the South African one. Initially, we had a rally up in a leading diagonal, but this ABC is the entire correction from the JSE, which was that complex WXY with a triangle. But in the US listing, it was a straight ABC zigzag, which is a much, much clearer pattern than what we had in South Africa. And then we had this rally up as well for wave 1, and then this pullback also unfolding in a clear ABC, 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 which then is a WXY for wave 2. And we can see again, likewise, that a strong rally up and this minor pullback with the tariffs, but also very, very small in context of what's happening globally.
You can definitely see the resilience and really it backing that overall trend.
Backing that over. So this tells me that this stock is really, really defensive and just wants to shoot up.
Okay.
You know, that. So for me, this is really one of those stocks that you need to look at for the short to medium term. So I'm looking at this as wave one, and whatever pullback you get here, which might be short-lived, wave two, and then more advanced to complete then wave three, but then we still anticipate wave four to wave five.
Yeah.
So from a technical perspective, AB InBev looking very, very good. And also, like I say, when the patterns are not clear on the JSE, you can just take a peek on the New York Stock Exchange, but still execute on the JSE. So that
okay. I never actually thought of it like that, so it's really, really great to kind of see the picture from both sides. Well, let's take a look at Discovery. Of course, we know that the healthcare sector is one of the sectors that benefited from the formation of the GNU. I don't know, maybe on Discovery it was maybe because there was more optimism that the NHI would go forward, maybe not looking like it is in the current form. But also, I mean, we've seen internally Discovery has done a lot to improve on its performance. And I think the last time you actually touched on it was when the GNU was formed. What does that technical picture look like since then? Yeah,
so Discovery really has been driven by some very, very strong fundamentals. So from the last time we touched on it, it had made this bottom here at 107 Rand 12 cents, and I was forecasting that the stock would make a new high above 160 at this wave A for wave C and potentially give us a new all-time high. And then I sort of went deeper and zoomed in and said it looks like we are in the early stages of this higher degree wave 3, which is currently maybe say halfway into this third wave, but the broader outlook was clearly bullish. So what we've actually seen has been a much, much bigger rally than what we had earlier forecasted, because actually when you look at it in context, where we were last year when we looked at it is just this point.
Okay, that's a long runway. It's
just this point.
Yeah.
And so this 1, 2, 3, 4, 5 that I'd labeled is actually for only a lower degree or higher degree wave 1, but lower relative to this wave 1. So the rest of this then rally is another 5-wave advance for this higher degree wave 3, with a pullback for wave 4 and a much smaller but also unfolding in 5 waves, higher degree wave 5 for this higher degree wave 3. So this entire rally, I'm currently labeling it as waves 1 to 3 only. Okay. So this current correction that we're seeing now, and we can see this is where the recent tariff sell-off has occurred, and I'm looking at this as a simple ABC zigzag, but only for wave 4. So once this whole market frenzy is over, then we can look at a further advance for wave 5. So this wave 3 peaked at a new all-time high. If this wave count is correct and this is only wave 4, then the wave 5 should potentially take the stock to new all-time highs. And again, like I said, the fundamental backdrop is very, very supportive for Discovery. So I think the fundamentals still tie in nicely with the technical picture.
All right. Well, talking about fundamentals, fundamentals that are pretty confusing right now, I guess, would be for retailers, because you've had all these positive things happening, lower inflation and interest rate cuts that were deemed to be set to benefit the retailers and the consumer in general. But now you have Trump putting a spanner in the works, where now we could see inflation actually spiking up again with those tariffs. But I do understand that Mr. Price is seen as one of the defensive players in that retail sector. So what can you deduce from the charts?
Yeah, Mr. Price is quite interesting when you look at it from a fundamental versus technical picture, because in their latest trading update, they seem to be gaining market share every month, and double-digit gains. But it will be quite interesting to see how the stock hasn't been performing relative to those solid fundamentals. So the last time we touched on Mr. Price was last year, I think around November. And the great irony, when I looked at Mr. Price the last time, I said we have this leading diagonal for wave 1, we have wave 2. This wave 3 looks to be almost complete, if not complete, at that juncture, because I could see this clear wave 1, wave 2, and wave 3 unfolded in a clear 5 waves. Then with this wave 4 pullback, and then this was wave 5, and I was labeling this as a higher degree wave 3, and the forecast was then for a correction for this wave 4, but followed by a further and final advance for wave 5. And literally from when we looked at it on this day, the stock has just gone down. It didn't make a new high. So what is concerning for me, even though the wave count of this wave 1, wave 2, wave 3, wave 4 is still intact, this wave 4 correction is a lot deeper than I would have forecasted. And also it's concerning because it's almost close to where wave 1 terminated. Now, from a wave perspective, the rule is wave 4 should not terminate within the price territory of wave 1. Otherwise, it then invalidates the 5-wave outlook. So it will be interesting to see if price does continue lower. So I'm a bit tentative to label this as wave 4. Now, the question is, what would be the permutations if the stock does continue lower and breaks below this previous wave 1 high? So this is where now we need to take a step back and look at the bigger picture.
Okay.
And when you look at Mr. Price on this monthly chart, there's two things that are very, very clear. In fact, three things. Is that we've had this high in 2015, we had this high in 2018, and now in December last year. But we can see that these peaks are almost at the same level, even though each successive peak is slightly higher
than the last one.
But it's still pretty much within the same. So this gives us what you can call this a triple top. And again, whenever I talk about support and resistance, I always emphasize, look at it from a price zone perspective and not just as a single a number. So this gives us a very, very strong resistance zone. And you can see historically how the stock has sold off whenever it gets to these levels. Yeah. So likewise, we have this very, very strong sell-off. So if that wave, 5-wave count that I have is invalidated, then the question is, where is likely support to come in? And that is only at 125 to 98 Rand. So where the stock is now, you can see it's bang in the middle of this trading range between this support and resistance. So the question is, what do you do? And this is what I call no man's land. And this is where even I say, yeah, here anything can happen.
Practice some caution.
Yeah, practice some caution. So anything can happen.
Yeah, that is actually quite interesting. And yeah, we will see if the technical picture does in any way align with the fundamentals at some point. Well, let's go into another sector that is heavily exposed to the consumer, and that is the automotive sector. Motus, and of course we know the pain that the automotive counters have felt because of the Trump tariffs that have been slapped on everyone. And obviously in South Africa the car industry is also in a little bit of a kind of weird position with all the Chinese imports that are coming in. So just talk to us about the technicals there for Motus.
Yeah. So the last time we touched on Motus was back in early 2023, so it's been a while. And I emphasized this very textbook, 5-wave advance, which was culminating in an ending diagonal for wave 5. And I also threw a lot of caution because what I could see was, as much as in the 5th wave being an ending diagonal, the stock was continuing to make higher highs. The MACD as a momentum indicator was not confirming those highs. So what we have is a very, very strong divergence, which, though it never guarantees a pullback or a correction, but it's a very, very strong caution that momentum is weakening significantly. And more often than not, that does precede a change in price direction. So what we've had since then, again, the stock didn't move much higher from that last analysis, but what we have in Motus is a situation which we don't encounter like a lot or commonly, which is what is known as a truncation. So what is a truncation? In the context of an ending diagonal which has 5 waves, the 5th wave of the diagonal more often than not terminates above the previous high of wave 3. So in this case, the 5th wave terminated just below the high of wave 3, which is then known as a truncation. So this wave 5 actually, its terminal point is at 131 and not at 136. So what we have now is, or what we have now is what looks like a very clear flat pattern as a correction, which is characterized by this wave A, which is simply a double zigzag. And then we had a very strong recovery for wave B, but also terminated below that wave 5 peak. And now what I'm forecasting is this pullback or C wave sell-off for the final C wave of the ABC larger structure. So within this C wave itself, you can see that the impulse count is pretty clear, and this is where the tariffs kicked in for wave 3. So whatever bounce we get in Motus, I would label it as wave 4 and then anticipate one more sell-off for wave 5 to then complete wave C. So that being said, this correction, which really from 2023, the stock has been trading sideways, downwards, pretty much at a very mature stage, but there's still potential for some downside.
Yeah, so meaning that there is possibly still more pain to be felt there. And I mean, understandably, because as much as we have these tariffs, things aren't really clear yet, because you have countries coming in to try and negotiate, and then we have retaliatory tariffs as well. So yeah, it's quite an interesting time to be in this space. And we will see what happens in the next few months. Thank you so much for your time and for your technical analysis today, Loyiso. Much appreciated. That was Loyiso Mpeta, Hedge Fund Manager at Unum Capital. And that's all for this week's segment, but do stay tuned for lots more coming up right here on Business Day TV.